Hey, welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today we're going to be looking at DraftKings stock. This is a stock that I own and got in around the $34, $35 mark. And I know it was one that some of you guys jumped on as well. So I just kind of want to talk about it a little bit because it's sort of been in a downward spiral here recently, despite the fact that, sports came back online and some of the things that we were hoping for. So I just thought I'd go through and give my take on the recent behavior of DraftKings stock and where I think it's going. As always, my stock picks and projections are just my opinion for your entertainment. Make sure you do your own research before jumping in any stock. And don't forget, if you enjoy this kind of content, then please hit the like button or subscribe to the channel. It really helps me a lot to make sure that more people get to see videos like these. And if you're interested in joining my email list, there is a link in the description there, and I will send you my free 15-minute stock analysis report to help you do research using some free tools on the internet. All right, so here we go. Back on May 26th, I did a video where we looked at all the pros and cons of DraftKings, and eventually I bought into it. And a lot has changed, really, since May from the market standpoint. So back in May, we didn't really have any sports from a pro standpoint. And there was a lot of concern if we would ever have sports. So to me, this was a big opportunity because DraftKings was an IPO. So when they went live in March, in an era where there was no sports, it was definitely an opportunity to jump on something that maybe wasn't in the best position to perform right out of the gate. You can see there that my cost basis is $34.56. Let's take a quick look at where the stock is today. $42.10. So I'm up technically. But if you see from the green chart there that goes back to April 23rd, this stock came out of the gate somewhere in the neighborhood of, $10, $15. And then it went up after the IPO. I kind of let it simmer for a little bit and watched it. I did not buy it on the first day. And then I sort of managed my cost basis down into the $34 range. And you see off to the right of that chart, really right about where sports started. Okay, so in August, particularly with football, that's a big time for DraftKings, not only on the gambling level, but on the daily fantasy sports level. And you can see that it skyrocketed up as high as $64.19. And then from there, it's kind of been on a downslope. So I get some questions periodically on the channel like, hey, do you still like DraftKings? Should we get out of this stock, etc.? And we'll talk about the pros and cons of that here in just a second. But a couple things to call out on this slide. We've got our earnings date on November 13th. I expect that to be a pretty significant call, only because we will get to see some insights for the first time as a publicly traded company on how the first part of the football season went for DraftKings. You also have some NBA in there, NHL. They weren't the same seasons that we're all used to, and I know viewership was down and everything else. But from a DraftKings perspective, they certainly made some money on those seasons. All right, so another thing that's been happening behind the scenes with DraftKings, and that they are competitors, of course, with FanDuel, who's owned by Paddy Power. That stock trades on the OTC markets. It is not an American-based stock, so it's not necessarily one that I'm interested in. But DraftKings has really taken this opportunity out of the gate to try to spend and solidify a marketing position. So another one of their competitors, of course, would be Penn Gaming. And a lot of you folks who follow sports know that Barstool Sports, which is essentially a media company that has a very popular slew of podcasts, YouTube channels, etc. Penn and Barstool are playing this game where they're like, we're not going to spend money on marketing. Our partnership is the marketing, right? Because Barstool has whatever they have. Hundreds of thousands of fans here in the United States. DraftKings, on the other hand, I would consider more of a traditional play, except they've really got their foot on the gas as far as the partnerships and the marketing dollars that they're spending here early in the standpoint of gambling. So you see in the yellow box there on this slide, in addition to being a league partner for Major League Baseball, NFL, NASCAR, PGA Tour, etc., off to the right, a couple names that they recently added. ESPN. They have a complimentary partnership with them where they're basically manage their acquisition costs. ESPN makes some money. DraftKings gets the exposure. They also jumped into Turner Sports and Bleacher Report, although that does not include the NBA portion. So that's important because Bleacher Report does a lot of stuff with the NBA, including like House of Highlights and things like that. So DraftKings is focused more on the NFL or call it just the football side. In general, they'll also have some opportunities with baseball and some of the other sports, but no NBA in that partnership. And then lastly, they're not a partnership. Michael Jordan joined the board as an advisor for DraftKings. And not that that really moves the needle from a stock perspective. But if you follow Jordan at all, he was an adamant gambler in his career. And I think that he not only brings like some credibility, but I think that Jordan in the gambling ring, there might be some connections in there that we don't know about that Jordan can help facilitate. We'll have to see. Personally, I consider the Jordan thing a low risk, high reward type test, and they'll just have to see how that works out. All right, so this is a look at all of the states in green who have mobile betting, right? So there's other states that have legalized sports betting, but they've sort of confined it to just, in person, if you will, or at a sports book. The green states have mobile betting. Now, there is an X there on New York, and that is because it's not New York City. It's like upstate New York. And the New York it's not a free-for-all. It's heavily regulated. So I'm not sure how much I consider them legal per se. Obviously, New York City is the bigger play on that one. Now, if you look down the yellow box where I highlighted, which is basically all of the South, those are the states that are not legal yet. And each one of these states has their own schedule on going through legislation. Not all of them will be legal. However, several of them will come online over the next 2 years. I live in Ohio, which is above the yellow box, and in our state, they're supposed to get around to voting for it here before the end of the year. And then once it passes, you go through the crapshoot of how you're going to set it up, how you're going to regulate it. So we're probably in Ohio. If we are lucky, it's Q4 of 2021. More than likely, it's a 2022 thing. So the green states are in, the others are not. It doesn't take a math genius to see that there's a lot of opportunity in the nots that aren't even live yet. So they're literally contributing $0 in mobile sports betting to DraftKings, yet they will have the potential going forward. Now, another thing to keep in mind is that while these states that are not green don't have sports gambling, many of them do have daily fantasy, which is where you pick, 5 or 6 players and compete against hundreds of thousands of other people for large prizes. So a lot of different ways to do it. We have that here in Ohio. So I've been an avid daily fantasy player for many, many years. That's where my interest from DraftKings has peaked. And I can tell you that from like an app standpoint and a user standpoint, DraftKings does a really good job. They make it easy to pay. They make it easy to get paid. And generally speaking, their app is easy to use and I enjoy using it. So that's where all these things came together for me. I am a DraftKings user, but in my state, mobile betting is not allowed yet. All right, let's take a look at the tip ranks dashboard to see where the analysts stand today. And we can see that, it's basically buys across the board. Some of these ratings are newer or fresher than others. But the bottom line, you got most people in here at $65. A couple go over, a couple go lower. But let's just call it 60 for fun. For me, with analysts, it's more of like a litmus test. Like, hey, I think one thing. What do analysts think? And so for me, it always feels good to come in. They're like, oh yeah, looks like they see the same thing that I do. All right, so let's talk about the pros and cons of DraftKings as a investment from a stock perspective, right? So you can see the list, growing market. There's 10 or so mobile states live now. 10 out of 50. Now you take the 50 states and you probably can cancel 10 of those states out as just being too small to matter in the bigger game, but we'll take anyone who jumps on. 2, no bleeding real estate costs. They do have physical sportsbook partnerships with certain casinos where you can walk in and do that, and that's great. But mobile is where it's at. If you're into mobile betting, you see that as the future, which I've read reports that say as this market matures, we could have 90% of the betting handle coming through mobile when legislation clears things up. So that's where I want to be, mobile. I don't care about a brick and mortar casino. Number 3, DFS is still popular while waiting for full legalization. As I mentioned before, the states in the green back on that map, that's not the only states that DraftKings making money. They are making money off daily fantasy. It's not the reason to invest in them, but they are going to be bringing in dollars, which they are obviously turning around and investing in marketing and partnerships for the future. Number 4, their proven brand concept and technology. If you don't know that, you'll just have to trust me as a longtime user. Last one, no debt and over $1 billion in cash. This is the big win on going live as a SPAC, right? Because people have raised the money already. It's the blank check company, so to speak. So DraftKings is walking in. They're not leveraged to the tilt. Anyone who has a physical casino is struggling right now on that side of their business. Okay, so carrying that anchor around of a physical casino is only going to add to your debt load. In DraftKings' case, they have no debt and they have literally money to burn. It can't last forever, but they can take chances on some of these partnerships, knowing that some of them won't be good. And that's the advantage when you have the blank check company. All right, so what are some of the negatives, to be fair? Number 1, mobile sports betting, which is the bull case here. It's not a one-horse race, okay? DraftKings will not, in 3 years, be 75% of the market. It's very unlikely that that's going to happen. If you know anything about gambling, customers always are jumping around looking for the best odds. So more than likely, the average gambler who's going to be in it every single week is probably going to be a part of 2 or 3 mobile sports books. They do this because they want to spread out their bets, so to speak, but they also want to look at different lines and different opportunities. Number 2, it's important to note that gambling is a low margin business. You know, the margins out the door are probably in that 5 to 6% range, okay? So this isn't retail where you have 35, 40% margins. It's a volume game, and a lot of it depends on how well the house does. The house always wins, so to speak, but you still have to manage those percentages and get a little lucky that, $1 million bet doesn't go against you. In addition to low margins, the acquisition cost per player is expensive, right? And that's Penn's whole argument with partnering with Barstool, is they can, in a perfect world, get everybody who listens to Barstool to sign up. Now, I'll tell you the secret behind acquisition costs is that you probably sign up 30 to 40 dud players for every solid player that you get. So every person like me who's going to blow, 100 or 2 every week during the football season, you're going to get a lot of nickel and dimers in there just looking for, put a quarter in the slot machine and win $1 million. Those people are not the ideal customer. And yet in your acquisition costs, you're still going to run into them in any market or partnership, right? So I don't care if it's Barstool Sports or Philadelphia Eagles team partnership. They've all got duds. They've all got nickel and dimers who are really just basically bleed the company from an acquisition cost perspective. If you pay $100 to get these guys in, you might get 1 or 2 good people, and then the rest are going to be people who are just going to go through the promo credits, and if they win, they'll play a little more. If they lose, they'll disappear forever. Number 3, COVID and legislation delays. Very obvious, of course, that COVID is going to Continue to play on sports. Some of the times we've already seen with DraftKings where certain players and coaches have tested positive, the stock actually went down, 2 or 3%. So we're dealing with that uncertainty, the possibility that at any time the NFL season could technically shut down or pause. And then the other side of the coin is there's no real start date yet for the other leagues. So that uncertainty, along with the fact that the legislative process for legalizing some of these states, let's just call it slow, it makes it very hard to project revenues even 3 to 4 months from now, right? So hopefully things kind of roll DraftKings' way, but there's a chance that they don't. And I don't think it delays the inevitable as far as more states coming online, sports returning normal. The question is that this year, though, or are you better off waiting until 2022? And that's what you have to answer as an individual investor. All right, so bottom line, my opinion, me personally, I'm holding it through at least NFL 2021 kickoff at the bare minimum, because that's the next comp date that we can see DraftKings as a public company versus, let's just say, a non-COVID football season. Hopefully we're lucky enough to get that. But frankly, I'm probably even in 2022, 2023, right? Because these are going to be the explosive growth years. Now, once the market matures and more of these folks come online, the battle will really begin, let's say in 5 to 7 years when, FanDuel will have X amount of people, DraftKings will have X amount of people, Penn will have X, and they'll all be trading these people around. It'll be like recycling plastic bottles, right? That's where you're going to start to see some cap on the growth, but I don't personally see that for the next 2 or 3 years. I think see nothing but growth. The catch being the next 6 to 8 months could be a roller coaster ride. Doesn't bother me. I'm in it for the long haul. I recommend, if you're going to buy in, that you stay in for the long haul too. Number 2 on this board. So I'm in under $30 all day long. So like I said, my cost basis is just under 35. If we're going to play this roller coaster game coming down, or if we have more COVID or legislation or whatever, I will add under $30. But for now, I'm holding. And if I get an opportunity to buy more under 30, then I will. All right, guys. So that's where DraftKings is today, in my opinion. There is nothing wrong with DraftKings stock. I think that we're just looking at an extended timeline that I don't really think is that much different than when I bought in July or August. Nothing's really changed, right? The only thing that's changing is the daily news and the daily ebbs and flows due to COVID and everything else. Stay strong and long is what I would say. Buy under 30 if you can. There will be red days. There will be red months. There will be problems. Close your eyes and hang on. And hopefully a year or so from now, we'll have a normal sports fall, winter, spring. And that's when you'll start to see stuff really take off. Thanks as always for watching. Please give me a like and subscribe if you enjoy this content. We'll see you on the next video.